Hi, folks. We spoke about bar time last time. The stock ticker was on the New York Stock Exchange BTX. We made a call on the first week of December, and that was around 3.2. So it went all the way to 3.4, which I would say is an easy 20 to 25%. So I think that was a decent call, though we could have done better. Going back to this week's screen, week two. Setting the parameters at return on equity, EPS quarter over quarter, 10%, over 10%. That's a pretty decent. Um, Over 10% is a pretty decent margin for most companies. And also, with looking at country of origin USA, the current ratio saying that the assets over liabilities is over 1.5. We're looking at oversold companies so that we actually have an opportunity to enter, right? And we get the following stock ticker. So Finviz is free for you. You could go set it up with all these parameters and look it up yourself. The next thing I would look at is look at stocks that have pretty much gone down. So one thing I would do is that I would look at the technical, or I would actually look at the TA, and the TA would actually show me all the graphs of all the stocks, right? One stock that seemed to catch my eye is the NUS stock. And the reason for this is that I see that it's balancing off a moving average. And that's when the institutional investors are really interested. So let's take a closer look at this stock. You could see that the EPS quarter over quarter is pretty brilliant. It's over 200%. We have great operating margins and gross margins. And it's not way off its 52-week low. Question now is it a fair value for the stock, right? Is $50 a fair value for NUS, which works on a lot of which does a lot of research, but also makes a lot of products in anti-aging and anti-aging creams. So looking at its fair value calculator, I see that NUS is at a fair value of $70. So you have like a 50%. I'm sorry, you have like a 30% margin on this stock, which is a pretty decent margin of safety. Going back to the stock charts and looking at its stock chart, you can see that though NUS has been oversold, you can see that it's gaining support around its 200-day moving average. There's been a slight increase, and also you could see that the accumulation line is way above it. So you can notice that there's been a fair amount of accumulation going on, right? And that's a good sign as an entry point for you. Going back to tradingview.com, which is another site that I use, a bunch of other indicators that could help you, reconfirm and confirm again and again that it's a good entry point. But mostly that would do. And there are other indicators out there like the ADX and the OBVs, which are all based on volume. The most important thing is a lot of people say, hey, it's the volume that defines the stock. But it's a question is how much is coming in and how much is going out, right? And that's something which um, the accumulation and distribution line does try to shed some light on. This black line that you see over here, that's going along with the candlesticks, kind of tells you what the how the accumulation and distribution is happening over the stock. All you need to do is say accumulation and distribution over the stock, say an update. So let me show you how to do this. So you say none and you do an update, and the accumulation and slash distribution black line is no more. But if say you want it back, so you go down to indicators, you click on accumulation distribution, you say behind price and update. And then what you see is that there is a fair amount of accumulation going around on the stock. And you can see the stock is bouncing off its 200 moving day average. So having said all that, let's take a look at the stock again in week 3. I think this is a great entry point for New Skin Enterprises. Question now is how much is it really going to bounce off from that value. So I'll talk to you more about that in week 3, and we'll talk about a few new indicators week 3. Thank you.